It's the Crypto Sniper. Welcome back, and we're going to tell you why we back bullish Bitcoin and why we think it's going to lead a next stage push up. Also, why it needs to take out a localized high. And further to that, we were also a tad cautious when we were talking on Twitter, possibly our last discussion about where USDT was. What about that looming risk that was a bit of a landmine? Where do we stand on that? And a whole bunch more. Plus, altcoin setup picked and modeled in our community that is going to do a 2x probably in a short space of time. We're going to cover all of that and more. Let's hit the charts. Okay, welcome. Here we are on Bitcoin, and I just want to highlight where we are and where we've been, and this move up, why I think it's actually a beginning of an up leg. So let's just talk about what's gone on. Overall, Bitcoin has been walking out of this head and shoulder that we've had for a while. It's not been overly spectacular, it has to be said, in terms of its upside move. And there was a degree of concern that if it took too much longer, it could start pointing to the fact that it is just waiting for a very bearish demand destroying event before taking a bit of a dip and a hit. As this break over here, you can see that for the time frame where we're at, up until that point, we're pretty flat. Even here, it's moderate progress rather than anything particularly spectacular, given the amount of time that has elapsed. But patience, my friend, it's been that kind of a market. And during the summer, there's many times that there you get a bit of a doldrums effect, generally, in terms of progress on the markets, both for both gold and silver, as well as for the other anti-fiat crypto, which Bitcoin is the god market thereof. Interestingly, mentioning gold and silver are both pretty much down, and actually crypto has diverged from its usual anti-fiat category on a fairly firm dollar that is stronger today, and on the likelihood that rates might go up. Bitcoin has, however, moved higher. Is there something coming with regards to maybe Blackrock's ETF application or some other form of event that's going to see Bitcoin actually outperform on a news specific event that is in the crypto space? So let's have a little look further. So before we talk too much, I'm going to just clear those lines there. Don't forget, when we predicted that there was a likelihood of a right shoulder here, we gave the 20k technical run as a great entry point. That would have seen you get a very strong move away, and in actual fact, had you utilized that entry to where the market is now, you would be something like that in terms of your progress, as opposed to a much flatter line. We call that the line of efficiency, the most gradient to the upside in the least time. There are carry costs and also opportunity costs. We also highlighted that it's quite likely that you're going to get some form of a falling wedge or flag structure here. You can decide which you might have gone for, and that a return move would occur to this neckline. We also had highlighted this left shoulder. Let's take those lines off and do it in a different color. We'd also highlighted that left shoulder, that larger head and right, that brought you down to here, a neckline there, and that had also indicated a revisit move. That gave us further confidence. That gave you a second entry at 24 nines, all the nines. So you had 19 all the nines and you had 24 all the nines. That again would have given you an instant powerful move away from your entry point. These are the kind of entries we specialize in, and it's when you are the most emotionally comfortable. Very difficult to get a trade wrong when you do that, unless of course you inverted pyramid and FOMO in ever bigger amounts on the way up, which is a very clear rookie error that does sometimes occur. But generally, put someone in that position and he's not getting out without making money. So we have a falling wedge here that has been kind of low vol against the dollar. We've been dropping down. For us, this falling wedge is broken. That's a clear entry. Now you're still sub 30, 29, all the nines there. And you could have got in here. We were a little bit more circumspect about racing in and making the 19.9 call that we did in the 24.9. We're making it now and saying you should go up higher. But I'm not so sure how far this particular run is going to go. There is a little bit of a foreboding element that hasn't been fully worked off in the structure here. You've got what I would typically describe a form of squeezing structure that raises a little bit of a concern for me. How far up will we go? Will we make the splitter? Will we make another marginally higher high? We want to break out of this pattern of marginally higher highs and make real progress to the upside. Could event-driven aspects bring this to a head and take us to a smash out the top of this capping ascending grind line over there? Also, on a bigger time frame, we've highlighted that you've got a bit of a bagel here, a basing ascending grind line, and you've got a bit of a broadening structure overall. These are generally a tiny bit worrisome. What does that mean? You're getting greater volatility, and the fact that this particular move only made it to our splitter when you were getting larger swings that were going from one side to the halfway mark to the other side, right the way to the other side, clinging the other side, going all the way to the other side. Now we've done a half move to the upside. So there was clearly a loss of momentum in this last up move. You often get surges of buying in three clear waves. One, this would have been the second, two, and this was the third. And this third didn't take you really into too much new territory, just that marginally higher high. We know that there is real resistance that existed all the way back from the downside leg, that is this flag. So we'll say goodbye to that Picasso of a jaw, and we will highlight this flag that was part and parcel of a downward selling that set up for further downside. Now we know the midpoint through the two corners runs somewhere across there, and that you are at a seminal point where the market found support. So these levels are hard yards. It's a muddy field to drag that cannon and across in that wagon. But when you break, you might break with real momentum. This is an early point of access and reference, and as I say, you could still have bought below 29. Now it's back above 30 again. So it's tiptoeing on either side of that. Now I want to talk to you about Bitcoin dominance, but I also think we should have a look at Bitcoin against the other currencies just before we pivot to the dominance chart. So how's it done against the euro, for example? So if we have a look at the Bitcoin euro, it's also a good move over there. And in fact, it's a bit better a move in lieu of the dollar is strong today. So it's quite interesting that Bitcoin's going up on a strong dollar day. Again, as I say, this is encouraging, but I don't actually think this is the huge ripper we would like it to be at this point. There are a few shadows still hanging. None so important as the rates. Go and check the Market Sniper channel where I did an update on gold and silver, and I highlighted the concern for further rises in interest rates. Remember, gold, silver, and of course Bitcoin don't pay you interest, whilst other things do. This typically the interest rates increasing is a bit of a headwind for Bitcoin. But there might be other drivers, as we've already alluded to with regards to Blackrock. In actual fact, I preferred the structure of Bitcoin GBP. The fact that this is not a marginally higher high and is equivalent to that actually gives you a strong ascending triangle structure, which could then see a really good break. So my favorite chart here is actually the Bitcoin GBP. But don't forget, strong ascending structures with key resistance, and on those key resistance, it's 25K in GBP. That's of course £25,000, not $25,000. It's closer to the $30,000 mark. Could give you a very good overperformance move, or it could fizzle. So fizzle means you break after a small rest and you smash it, but then you run out of momentum, and then you come and you break this basing ascending grind line and square up for a while. So that could happen, or you could get an absolute runner and melt up. So what you get is a polarity of outcomes, a really amazing outcome with overperformance even to target, or you get a pop that everything looks groovy, initially high momentum, and then a sudden air pocket where there's just no bid stack coming up underneath you, and you come back down and fizzle into the previous levels. So that is the one downside of ascending structures. You get an either or situation, and you don't know which one it is until you're halfway into it. So that's Bitcoin against the GBP. Of course, against the yen, which has been one of the weakest currencies, you have made continually higher highs. Now it's time to pivot back to that dollar, but I want to show you something else that was probably not in your first grasp view. So I've drawn a couple of other things on here. So first I'm showing the volume here. Now I don't always do much volume analysis here on Freeview, and we typically do a lot of volume by price, which is horizontal volume, and we have a very specific methodology in how we do it. That's all for premium customers. You can go and join the premium membership, by the way, by jumping into the links below in the description, the very first link, and you can book a call if you want. But essentially this volume over here is not spectacular. It's an initial tickling of an upside, which is why, as I say, I think you'll drift a little higher, but I don't think you got blast off rocket volume. If you compare it to the volume of the 19.9s call that we made, you can see these Manhattans and the fact that they were sustained for 3 or 4 more days at quite elevated level. By the way, one place that I do allow moving averages which do no harm is on something that is separate data like volume. So you can choose a moving average for volume. I typically make it very, very clear and make it black so it pops, and you can see how after a certain amount of time that you are well above the typical average for the 9-month, the 9-day, the 9 days session if you're on the daily charts. So all of those were above average days, including you got within the space of about 7 or 8, you got 5 or 6 days that were above volume. That's what drove you from 19.9 eventually coasting to a localized high of around 31. 19.9, 31, you can see that. That's quite a move. Essentially, you've got $11,000 plus in that. You could see you even had two days of above average volume on this call, but it didn't have quite the same grunt. And now you're looking at this, and this volume is minorly on the last 2 days over. I also highlight and tell you often that low volatility generally, in the general sense, where you don't have any super pattern specific items, is broadly bullish. Super low volatility. You will note here that this was super low vol. So we're going to highlight this for you in terms of that. You did have a couple of skittish moments in there and there, but you can see that very, very tight volatility. So we've drawn the wedge for you. That was to the halfway mark. That's the full move. That's a secondary move. You've got a second period. You see the buy up there, and then you've got another buy up on that hammer, and now you break. But all on the low volume. So, you know, it's a view held, but held softly, not too aggressively at all. So that's interesting, and you can see that there's only 2 days that are marginally above the aggregate for volume. What I will highlight that's kind of interesting is that if you look at the OBV, which is the racked and stacked accumulation of volume, you are in fact getting, and it's okay to do technical analysis on a separate piece of data. It is not a derived RSI that is based on price data with a mathematical formula or a MACD or something else. This has separate volume that adds all the green days and disaccumulates all the red days, that you are in fact getting a squeezy structure that could point to a high move of accumulation, a real breakout. I mean, this structure over here has come from that low, a lot of zigging and zagging, but eventually made that high. You had the strong pull down for the dip down. You made a tabletop type secondary high all the way into complex but basing low, probably there, and then you started your third. Again, a little bit of zig and zag near the top, and now you've got low vol, and you've begun to move up. You could get an event. This would be typically news driven, so you might be trading the news before the news of an announcement that is particularly bullish, specifically for Bitcoin, because that's where we're seeing this particular volume traits and characteristics. So the OBV as a pattern indicator could be pointing to a wild accumulation move upside. That means moves on volume that would follow typically the announcement of something like an ETF being approved for, Blackrock, for example. That would be accompanied with huge green candles and massive upside move that would probably take Bitcoin to the doorstep of our targets, 40K, 42.5K, that we've discussed for a long time when we were discussing this neckline. So watch out for that. There is a real possibility that this starts small and creeps out, but gains mega volume at a later point. And the OBV might be a bit of a clue to that. We are volume focused, so this is not a typical indicator. It has a separate data set of volume, and that is why we treat it differently than anything else. And you'll note we don't have RSIs and anything of that nature on here, or MACDs. So that's a little bit on Bitcoin. Is it starting slow on a much bigger journey? Where was that journey again? Some of you might need reminding. This might be the first video you're watching. Don't forget, subscribe now to get the man who's put you in at 19.9, put you in again at 24.9, not to mention warned at 55,000 you're going to have a bear market, kept you out of the bear market on the downside, warned this would be a rising wedge and would sell off again. You weren't done with lows when everyone else was wanting to call bottoms. You name it, we've been there and we've called it. So in terms of Bitcoin, we've got a pretty good record. And overall, a nice bump in the OBV would be most welcome, because it's relatively low following the last bull run and the secondary bull run. Again, something to note on the second bull, I often say that 64K was your spiritual high, even though the amount that it traded made 69 at a secondary high level was FOMO, dumb retail money following up later. And why did I say that? Because the typical structure of such a move, just taking out the previous high, making a marginally higher high, is a worry in of itself, and the volume inside which it did it was given away in the use of OBV as an indicator. Look at the strength and the volume there, and look how the 69 was formed. There was actually a disaccumulation going on. In other words, the selling days accumulated relatively better than the bull days over the whole period. So you didn't have this absolute blocks of green days, which were all well above average, that we're showing in here, to anywhere near the same degree in the secondary bull run. Hence why you should have been concerned and actually had an opportunity to get out at high prices a second time for that bear market. Note also this flag that made all the way down to the target that we warned. And then, as I said, this rising wedge we warned would see further lows, which did occur. Again, also note the super low vol, which is typical of final lows. And Bitcoin is your God market, and it matters that it's Bitcoin that does it. So there you go. A little bit of detail info and a little bit of a historical redux for the reasons why. It's not about being hindsight intelligent. It's so that you learn what to watch for yourself in future similar type events. Okay, so that is a little bit of a story on Bitcoin. I'm not sure that's going to be a runaway, but the OBV might suggest that you have a big chance at more. If you like this element of volume, believe you me, we've got a lot more that is even more advanced and more powerful that we do with regards to volume by price and many other aspects of volume analysis, from voids, vacuums, etc., in price behavior that tell you where things are likely to settle on balance of probabilities. Remember, we don't know anything. We are probability-based traders that trade exceedingly low risk for highly expansive moves. That saw us benefit from the XRP move with the squeeze that went on there. Okay, the other thing I will show you, seeing as we're doing a crypto update over here, is Total 3. So Total 3 eliminates both Bitcoin, and it also eliminates, and I'm going to also get rid of the volume here, it's not going to be material, it also eliminates Ethereum as well. So what does that mean, and why are we interested, and why should you care? Well, at that time, outside of the stable coins, XRP was probably the largest. Binance had slipped against XRP. Of course, XRP had its news that we traded. We can drop this from daily to 12 hours. Actually, we get a bit more detail. There you go. This also points to a potential turning. So you've done a bit of a round trip on the total 3. Here is where you went exponentially up, and we got our rainmaker 75% plus profits in a single day. Then we watched and waited. Will you get an upside setup in XRP? And it was fizzling lower and lower. We got out entirely, and I actually got crypto neutral because of that USDT. In short, I got square. I was a bit uncomfortable on debt and a couple of things. So we've been a little bit tenuous about this. Don't forget, the stock market's been going up, and it's now running into a degree of resistance. It's starting to come to levels that are very steamy, and of course a lot of risk and recession on the macro economy. Generally, you could get a demand destroying event that could do real damage to risk on assets. So it's not the time to lose your head. That said, with this break, this was very much like the ADA upside HVF that we showed you. That's part of this total 3, and the XRP, we'll show it to you. They're the aggregated whole. Of course, that's higher over there. So we called the ADA upside, we called XRP, and those occurred. And since then, you've been in this continuation pattern, but downside. This recent hammer over here brought you for a round trip back to the levels that I would call the funneling type levels. This price behavior on the total is very, very tight, low volatility, and would have been the funnel on a more horizontalized basis as per our usual structure that we trade. Real funneling tight at that level. You typically get strong support across here, which is why we project forward the key levels of significance that are part of your funnel. Now you've seen a hammer and you're starting to see upside. So I would imagine XRP and ADA to start showing some strength. Those, the second to Ethereum, second tier to Bitcoin and Ethereum, to start showing a little bit of bid action as well. We remember our macro on XRP is exceedingly bullish. We have the mystery token that is 2 times more bullish than XRP as well. That is inside the top 20, 25 tokens as well. Again, if you want to find out who that is, go ahead, book a call, grab the first link in the description below. So this looks like a natural turning point after an easing backwards. Ethereum and Bitcoin, wow. I'm going to touch Bitcoin dominance because Ethereum is underperforming. So we drew a broadening structure and said, we are back on the gravy train when Bitcoin snaps out of its fantasy around the halfway mark. So Bitcoin has been vacillating and dolphining on either side of the 50% of total market cap. That means half the market cap of all crypto is Bitcoin. Right. When we come out of that broadening structure, that's the point where we see Bitcoin dominance beginning to reassert. That event occurred there, and this is showing why Bitcoin has moved up in percentage terms, despite its large market cap, more than many other alt and smaller cap tokens. It has broken out of its broadening structure. We call this a slide, and it's typical for the red line to be broken, and we're going to have another little foray deeper into the 50% and beyond side. Remember, if the others start getting a bit of a bid too soon, that makes it harder for Bitcoin to remain more than half of the total pie. Let's have a little look at Bitcoin versus the NASDAQ. Now, we've said it's been a little bit disappointing and it's running late in terms of it, but you could see that super low volatility with reference to the NASDAQ. We are now getting a very clear sign. There's your squeezy Japanesey. Look at that boiki. Then you get the real green candles to the upside, and you get the subsequent green candle. That is typical of a 3 rising method, a bull pole, spitting tops with a slight sideways or downside reaction, and then a reassert. So it does look, even against the tech market, that for now, Bitcoin is showing relative strength to the NASDAQ. Then we've had gold that's had a bit of a dull day. And you'll see, without changing much, I've just clicked on Bitcoin divided by gold. Very much the same thing holds, only you've probably gone a touch higher here as well, with the gold's rather lackluster performance, and silver even worse so, by the way. So Bitcoin against silver would really be pushing ahead. Remember, silver was everyday peasants' money for many, many, many years, more so than gold. So that's a little bit about the Bitcoin cross references. The thing that we were watching that is a slight concern for us was the potential for Tether dominance to reassert. I think we're going to get a little bit of an Indian summer here with Bitcoin and crypto first, but this possibility of a shouldering, I highlighted on the USD Tether that you had a number of shoulders in here before you finished with the final shoulder, and it could well be the same here. You could come lower, that looks like it's invalidated that, but the fact that you have complexity in the left can see you getting complexity in the right. There's a very clear head, and we need to watch that. That can come down for a while, then it can go back up, it can come down a third time and go back up, but then eventually if it were to break, we will get Tether dominance, and if it breaks that, we could get a 12.5% run. As I said at the time when I highlighted this for the very, very first time, it's not the most gorgeous pattern in terms of structures, and in fact it could be a downside break that could head to the downside. We will wait and see how that pans out, but it does have a couple of confluences with a W bottom here. So we're not losing our heads in optimism. You see the W bottom, maybe a fat Koki draw would have been better. TG Pink, smash him there. A little bit of W bottoming, a little bit of a neckline resistance there at the 4.9. That implies, again, 12.6. And in the same way, this structure still has a 12.6. So this can come down. It could even run the red line and make a lower low. But then at some later point, demand destroying event, we could get a really strong move into Tether. That points out at some level there still could be, it's not a certainty, it's a possibility, there still could be some serious threats on crypto in this. So this is why this is not a headless chicken bull run, charge all leverage on, max out, there's nothing in the way, new highs, rah rah rah, moon boy moon, go go go, you rocket, you good thing. There is much more, I would say, macroeconomics that need to be considered, interest rates that need to be considered, the possibility of an interest rate spike and the dollar dominance that could come with that need to be considered. So this is a cautious for now bull with some possibilities of future landmines that could be trodden. So as I say, participate, maybe participate at an investment level, shoot and scoot, and do not hesitate to protect capital if you see anything you don't like. This is not a grim hodl, grab the elevator and ride it all the way down. That would be foolhardy. So what else did we have for you? Well, we were talking about dominance of Bitcoin being good. Ethereum is underperforming in terms of that, and its dominance has actually skidded off a little bit. That said, it was up. It was up as an overall token, and we have pointed out that again along the lows here there's a little bit of a concerning grind. Some people would be very quick to draw a rising wedge there. You could of course get first up to the other side, you could even get a pop out the other side before breaking, but this risk on the basing ascending grind line, the bagel, is a concern. I prefer it when we get better structured reversals. So there is a lack of momentum. I put this down to the wrecked nature of retail crypto and the SEC largely with their obfuscation and vagary not giving the green light to institutions. So we have this unearthly gap where there's not much left of retail crypto to get in that isn't already in. They're not near as strong as they were at the footsteps of previous other possible bull markets. And as a result, there isn't really the power, the momentum, and there's not the confidence to enact the leverage either. In short, too many wrecked retail. At the same time, the void between the bigger money coming in is largely down to the lack of clarity on regulation and the ongoing. They've taken 5, 6, 7 years and come up with nothing. You get different judges, you get different opinions. So this is certainly not supported for institutions. Tell us once you've made your mind up what the damn hell it is, so that we know how we can invest and get behind it. So this is definitely systemic, putting the entire asset class on ice. That's not to say you're not getting some movement, some trading, some popping, but that volume of conviction is not there. A Bitcoin ETF being approved for the very first time to Blackrock will certainly bring substantial volume of an institutional nature and engage retail potentially to the upside if that were to occur, and that's something that might be a possibility, or further clarity or a change in the SEC's manpower in terms of that. So whilst ETH is up, it's up at 1863, it's still some way down from its 2000s and its 1900s. Again, fairly low vol, could have a sudden surge. It could go up before it goes down. I'm not calling it a bear. I'm just saying in terms of its dominance, it's not got quite the same feel as Bitcoin, which is essentially reasserting downside. In fact, ETH is in a rounding here. It kind of needs to get up and get going again to get some VUMA, but I do suspect it could have a down move to here, and then we get a far better structure for Ethereum after a dip down. So there's still, again, what makes Ethereum dip down? Well, maybe something negative for Ethereum, or the fact that alts get harder hit than Bitcoin if Bitcoin gets some good news, but then generally we have some macroeconomic, some dollar strength that pull the whole category down, with Bitcoin going down least. That could see the ETH dominance dropping because Bitcoin would continue to accumulate dominance. So it's not our shooting star just yet. XRP, I think, is a good reaccumulate now. Generally, I think that larger sell-off period may be coming to a close for the first time in a week that isn't looking too negative. That said, one swallow does not a summer make. You could come all the way down. For those of you that don't follow this channel, we were getting everybody in long early on this. You had a tightening within a tightening. This is fractalization of structure inside an already existing structure, which in of itself is inside a much larger structure. So we have patterns within patterns which allow you to multiply your way to growth. Had you gone in here and kept a leverage position or even investment position, you stand to gain, because you would have got such a tight stop. If we get our 16.75 odd and overrun dollars target on the much bigger time frame, you actually will have a 600 plus risk reward ratio. Yes, you heard me right, 600 plus. That's right. So that is how it goes. That is how it looks. Switch the eye on, and in fact there it is, 683 and all the way to the $17 mark, $16.77 cents. So that is the fractal within a larger fractal within a macro structure, which is very bullish, and we've spoken out about at great detail for XRP and its potential upside. Okay, so you can see XRP's dominance not quite so bad as Ethereum's. Generally it's trending up, and we have currently an 8% target for that as well, and another target at 6.54 from various different pattern structures that it has set up. It has, however, on the dominance, kissed at the funnel of the break as support and is starting to form a hammer there. So it starts to represent good accumulation again. We got out in the 70s, so I'm glad not to have ridden that dip to the low 60s, getting in and around 63 in some sense, 63.8, 63.9 doesn't represent a bad entry for reaccumulating, but be careful. There may be a bumpy ride in terms of this journey. We've got to watch what that USDT dominance could be all about. We've got to watch the macroeconomics. Again, I highlight landmines abound. So we are bullish. Then we come to, let's jump to ADA quickly. There are a lot of ADA fans in the crypto world. I know Charles is pretty authentic guy, and as a result, he's popular. I want to highlight on a much lower time frame. I think it's a 2 hour, 4 hour Let's get that one up. So we did give this as a trade. Let's go 12 hour. We did give this as a trade as well at the time. The reason you have targets is it's a great place to get out. Any point from here at 33 cents, had you got in when we were talking about this structure in and around the 28 cents, 28.5 cents, you would have done just dandy. It actually traded as high as 37 cents. You've come all the way down. You've bounced in the funnel, but you put in a bit of an anchoring hammer there, stake in the ground, still above. You'll stop out there. By the way, this has already performed when it ran that number, and it overperformed immensely over there. You could have got out. You would have sat out a whole bunch of sideways action and a pullback. So it does show some basing signs, and it's shown some relative strength here. A little bit similar to that total 3, only of course you had the full proper upside HVF that we gave you right there. So I gave my community a setup to draw, and one of the community members drew it. That came from a feed, and that was AKASH network. His description is not entirely flattering of it. This is inside our community, and this was the structure he was drawing. You could see at the time it was around about 55 cents. I don't overly involve, but I sometimes take a shoot and scoot trade if there's sufficient volume on smaller tokens. We don't always talk about them, but there you have about 55 cents on that. With this recent turning on crypto to slightly bullish after a drift off, we actually have this particular setup making some progress, and we can share that with you. This is what you missed by not being in the HVF community. You are missing right now this particular trade, which is showing a risk-reward ratio of about 10. So there was a falling wedge. In fact, our community covered it quite extensively on Sunday. It was dominant part of the Sunday. I warned about getting into big. As I say, I still had those concerns surrounding the viability with Tether and some of the macros, but it seems this one could get away and get done. You'll be looking at around 94 cents, could potentially breach the $1 mark. You could have been getting in long over there, and we can tell you roughly where that is on the falling wedge. Very low vol, 58 cents around here, and you could be trading it long. Making good progress now up to 75. Second interim and targets to come on the border of the dollar mark. That's what you get by trading HVF. 10.2 risk reward trades brought to you, analyzed in great detail by our insiders and top guns on Sunday, and the setups as discussed in our community here with all the detail. You can check the individual charts, the structures, all doing one thing with the goal of achieving one thing to a very high standard. In other words, super tight risk with highly expansive rewards, and that's what you're getting. A break, a return move to that falling wedge, which I can make a little bit fatter for you. Let's do that because the gray is a little bit faint. And that happened roughly yesterday. I noticed it as it was starting to creep out. This one's available on KuCoin, and as I say, you might even make $1. We would close on 93, 92 cents. So quite a few community guys might well be in that and enjoying the proceeds of that. You can watch and see if this one makes target and whether a 10.21 risk reward trade was harvested by the likes of our community. By the way, a single trade like this with a risk of $1,000 already more than pays for your entire program with change. How much are you leaving on the table by saving from investing to get free view on YouTube from me instead of actually being in the community and being engaged from long? And by the way, if someone wails in right here and it has a minor pullback to here before going there, you could be absolutely washed out. You need to be in early with tight stops, with money management. That's the nature of the game. If you buy tops and you chase momentum, you will get burnt. It's a matter of time. Okay, that's the Crypto Sniper giving you a short update. So bullish Bitcoin particularly possibility of a news-driven event that has Bitcoin supporting specifically an OBV on Bitcoin that is setting up, interestingly, that supports that possibility of a sudden spike in volume as well as price. OBV, on balance of volume weighted, that is combination of upside move multiplied by price move. All of that could be driven by news events of some sort that is Bitcoin supported. So again, that puts, as I say, the obvious thing is to think of the Blackrock ETF potentially, and that could give real dominance, a surge on Bitcoin side later for the alts to follow. Why not be in the main mover? But for now, the initial move is on light volume, and in the absence of that news, it could fizzle. So it's totally dependent on what the future holds. There may be a setup for a later surge of real volume to come in, and this is just a little pippy getting started, or there isn't that much to it. It has a small run over and then we gestate a bit. In that instance, you have to bear the risk of the macroeconomic environment, which is currently recessionary, deeply recessionary in our view. A lot of people in pain. Credit is going down on credit cards, but you are finding rates are going up, interest rate payments are going up. There's a lean on real estate. There are a lot of things that are making it very difficult for the retail consumer. And if we get a hit on the stock market and it started to correct downwards, you would be in a difficult situation for all forms of risk on to continue to outperform to the upside with a demand destroying event. Does everybody understand what's entailed in that? I hope so. If you want to find out more and have regular updates from me, plus multiple webinars done throughout the week with my Top Gun trade advisors, you can jump on and click the link first in the description below, book a call. It's time you started getting a multiple on your investment with us. And that could be the difference between building real reset wealth in reset times. Until next time, I'll catch you later. Thanks for watching.